So summer is over and we're entering the final stretch of the year. Now, Friday's US jobs report was significantly worse than expected. And now we have three rate cut expectations from the Fed back on the table. Now, it's a little tricky here because inflation still remains a wild card, and we are seeing a mild upward trajectory over here. So uncertainty continues to persist with questions around tariff implementation, US GDP growth, and how the macro will transmit through to earnings. Now, given this backdrop, we see five themes to the end of the year for US equity markets. Now, first of all, we think lower borrowing costs will improve balance sheets and boost private equity deal making and support corporate activity across sectors. Secondly, we think a softer US dollar will help revenues and margins as companies who have international exposure translate their revenues back into the US. About 40% of the S&P 500 actually derives revenues from international sources. Fed easing, tax reforms, and stronger consumers all support small caps. So we are already seeing a surge in small caps, the Russell 2000, and we think there's potential for small caps to go higher from here, given the financial environment. Not to mention earnings. So for the second quarter, small caps actually posted almost a 65% year on year growth. I was just on Fox Business earlier today, and that's exactly what we were talking about. Now, lower rates and central bank buying, industrial demand, all create a supportive backdrop for gold and silver. So we think gold and silver can also move higher into the end of the year. And then finally, entrenched platforms, scale advantages, and smart acquisitions actually position adaptive software companies to benefit from AI. So, software, which has been a laggard so far, can actually see some upside potential here. We've presented a deeper dive into each of these themes along with 13 stock picks on our newsletter at macrovisor.substack.com. If you're interested, you can go have a look.